Well, hello, team. Hope you're having a wonderful day today. So, I had a really amazing trade today that I wanted to give you guys some training on. I miss training you guys, so I'm going to do a little bit of training here with you today. And yes, this is going to be on the US 30, but what I'm going to teach you today, you can use on any asset class, any time frame, any pair. Our recommendation, obviously, disclaimer first, is that you stay on Forex, right? Because Forex, you have a little bit less volatility, which can get you, you're trying to train your eyes and train your brain to see all this stuff, guys. So I'm going to share everything that I looked at with this trade and just kind of give you my mindset and my insight on what I looked at. So trading, ladies and gentlemen, with the smart money based, obviously that's what I am. I'm a smart money trader. The smart money characteristics or the smart money is you're about riding the coattails of the banks. That's what we do. So this is not if you're on the 62 trade, you don't have to watch this video. If you're doing the smart monics only, you don't have to watch this video. This is about smart money because again, I am a smart money trader. It's not saying that this is the right way or the wrong way. This is just how I trade. And a lot of you have reached out to me personally and asked me to do some trading training as far as that goes. So let me share this with you. Obviously, right, this is the US 30 on the 4-hour. We are in a downtrend, right? We are in a downtrend. We have, right, high, low, right? And you have a lower high and then a lower low, okay? And then you have a lower high. What would you expect next? You would expect a lower low, right? So that is just going with that trend. You're going with the higher time frame trend. You never, ever want to trade unless you're doing a very short-term trade against the higher time frame trend. It is vital to your success. All right, so let me just go ahead and get rid of that. You see the whole point of the information I just gave you right there. So we're obviously in a downtrend. Now, the next thing that I look at is what would the banks, right? So we know we're in a downtrend. What would the banks want to do? So what do we know that the banks are always doing, right? They are always filling imbalance, right? With IPA imbalance. They are always and doing one of the three things. Imbalance, they are mitigating bankers candles, right? Or they are taking liquidity. One of those three things. So what would be the area that I would be looking at the banks to want to come down? So what is some imbalance, right? Some imbalance right in here. And let me just show you this real quick. I'll go back on the replay one time right in here. Let me just so you guys can see it a little bit clearer. Okay. So we have imbalance right in here and we have an unmitigated, right? So what are one of the things that banks do? They mitigate bankers candles. This is a bankers candle. This is not a bankers candle that has been unmitigated, right? Why? Because we had a break of internal structure, came right back down, mitigated that. Okay. So this is the last bankers candle right here, 4-hour time frame. This is an unmitigated bankers candle with imbalance. Okay, so here's what I look at, right, is that there's a reason for them to come down to this area. There's a reason for them to come down to this H4 bankers candle. Okay, so there's my bias. My bias is the overall trend is down. My next bias is that what's the reason that they would come down? Well, there's an unmitigated bankers candle. Remember, you're kind of like the lawyer who is putting together a case, right, trying to prove what your theory is. That's what trading is, right? It is a calculated decision based on rules, and this is a calculated decision. What is the reason the banks would come down here? Well, this is an unmitigated bankers candle with imbalance. There you go. Okay, so let me go ahead and play this out a little bit so you guys can, just go ahead and I'll just do it candle by candle. So we did have this imbalance fill. Okay, we had this imbalance fill on the 4-hour. Actually, it's not quite filled. But it came down pretty darn close. But anyway, so the point is that we did have that, but we still have a little bit of imbalance and we still have this unmitigated bankers candle. So let me go ahead and push forward here. So stuff, that's kind of funny. The price action was just going sideways. So let me just kind of drop down to the lower time frame here and I'll show you what I was looking at. All right, I'm actually going to drop down to the 5-minute. I'm going to play this out because again, we are looking, right? We're looking for a way into this trade where, that whole hypothesis can be, fulfilled as far as that goes. All right. Let me stop it right there. Okay, actually one more little click here. All right, so this is what happened. So now I'm down here on the 5-minute time frame. So what I'm doing is I'm looking for a way into this trade. We had a bounce off of this 4-hour area. So there's a possibility, and again, right, you have to look at both sides. You have to look at this. Okay, so my bias is down, right? Is there a possibility to come down right after that 4-hour wick, fill that banker's candle right here on the 5-minute and go up? Well, sure there is. Right, so that was a possible trade idea, but it didn't play out. And again, I'm just giving you insight into how I think and how I personally trade. What happened with this? Well, what happened, if you look at this, we had a wick down here, and then we continued on up. Okay, so this invalidated this trade. So this is no longer a trade at that point. We had a wick, we had a rejection wick, and then we continued on up out of that 5 minutes. So this is no longer a valid trade. So I'm going to take this off because again, trading is about waiting for your price action, right, to do what you want it to do. That's the whole point of trading, guys, is that you have your rules and you're waiting for price action. Now, if this had come down here, would I probably taking a swing with the ATH confirmation? I probably would have, right? Because this could have been a rejection wick off of that 4-hour. I showed you that before, but that didn't happen. Okay, so that trade is negated. So now we're looking, right, for a way to get in to do what we talked about before, going with the trend, filling that 4-hour banker's candle, all that stuff, okay? So we're going to go ahead and play this out. And we're just going to look at price action, right? If you are a smart money trader, it is all about the price action. Okay, so what's price action doing here, right? What is price action doing here? We all know what it is, right? It is going sideways. That's it. Right? It is going sideways. If you can box it, you don't trade it, right? That's another famous saying that I made up. Anyway, so put a box around this, right? If you can box it, you don't trade it. Okay, so you just wait. What is price going to do? Is it going to pause here and then, go ahead and blast up out of here? Is it going to just, go woof and see you later, right? Or is it going to slam down? What's it going to do? Which way? But you don't know which way it's going to go. Okay, so you can set alarms above in here, and I was, happened to watch it because I'm in front of my computer. But you can set alarms on either side of this and just wait and look at what happened next. Boom. All right, there you go. Right, alarm triggered. Okay, so your alarm triggers. Now what do? Right. Well, let me just go ahead and play this out a little bit more and just show you, right? So when this went ahead and came down here, what I did is I dropped down to the 1 minute. Now, I'm not telling you to drop down to the 1 minute, okay? I'm not telling you to do that. You have to be an experienced trader. You have to know what you're looking for. You've got to, go through the process as far as that goes. But again, I'm giving you the info on how I traded this morning. So this is what I did. So I came down to the 1 minute. I saw this banker's candle right here. 1 minute banker's candle just inside that box. We blasted out of the box. Okay. So now what happens? Well, we wait for it to come back to that area. We have a reason for it to come back. There's an imbalance up here. We have this mitigated banker's candle. So let's just see what happened. Look at all the ATHs that painted that didn't stay. That's kind of interesting, huh? On the 1 minute. Okay, so there we go, right? There is the hit on the 1 minute. Okay, now I didn't take the trade from here. Why? Why would I? You could have taken the trade right from here, and that's absolutely fine. Let me just blow this up a little bit so you guys can see a little better. Taking a trade from right here would be absolutely fine. Okay, that is no issue. But here's what I want. I want an additional ATH confirmation to let me know that this is a high quality trade. So here's what I did. Okay, so I went through and I see this bang hit. Okay, cool. So came up here, nailed the banker's candle. All right, so what's going to happen next? Well, next we have another push down, another break of structure, right? This broke this internal structure up in here. Okay, so we do have now an ATH right here. So you could have gotten in at the end of this 1 minute candle, and that would have been fine as well. Stop loss above here, right? And then ride this sucker down. But I didn't do that either. So let me show you what I did. Okay. Just move forward a little bit more. Okay, so what happened here, we broke this internal structure. Again, let me zoom in, okay? And then we went ahead and we made a couple different ATHs. Now, you could have gotten in on this one. There was also one right after that. Whoops. Okay, so there's one right after that as well. Okay, so what do we have here? We have our overall bias. I'm going to recap. Our overall bias is down. We have a reason for it to go down to the 4 hour. Okay, we have a break of structure, right, off of this box, right, off of this area. We have a break of structure. We have a retrace back to the 1 minute bankers candle. We have an internal break of structure on the 1 minute. And then we have a retrace back up to this bankers candle with an ATH. And this is where I got in. Let me share with you my trade planner. Boom! Right there. And then look at what happened. This turned out to be a 1 to 15, guys. Now, oh, here's a cool. Stop. Okay. So here is a great idea or a great teaching point. So this came down here. Okay. This came down here. As a 1 to 7. This would have been a beautiful take profit area. Fine. Okay. Why? Because this is equal lows right here. Equal lows. And I did take a portion of my trade off the table, about 25% actually off here at equal lows, because there's a reason for it to go lower. Okay. So what I did is I took a portion off right here at these equal lows. And again, smart money trader, I take my profits at equal lows or equal highs. That's all. Right? I don't have a set 1 to 5, 1 to 3, but you can. I'm not telling you can't. I'm just telling you what I do, right? So you can, again, do what is it your trade plan, but then it retraced, right? And then it retraced up here. Now, I wasn't looking for, because this is a little bit later in the day, I'm not looking for another entry. I'm just following this price, right? I'm just following this price. And then look at what had happened. Look at that. Look at that. Look at that. Right? So if you had taken your full position there, that would have been fine. It's a 1 to 7. That's awesome. Right? But I didn't. I took a portion here, took some money off the table because it could reverse off of this 4 hour area like it did before. Right? It could reverse just like this because you don't know what this pair is going to do. So, but I took a portion off of here, put some money in the bank. Right? It came back up here, made this nice W or nice M, I should say. Right? We don't really trade M's and W's, but this is a reversal pattern right here. And then I could have gotten in here again. I didn't. Okay. But then it just came screaming down. And again, so where's my targets? My targets are right down here. Right? Right down here. Okay. So what I did, I actually caught this whole move. It was insane. Like I don't usually catch the whole move. You don't really need to. You could have set your take profit right down here, right down here. I caught the whole 1 to 15 on this trade. And there's the bottom right there. That's where I got out. Because again, you have equal lows down here. Let me, let's go over there. Anyway, you have equal lows right down here. Look at that. Equal lows. Okay. So it blew through that and it's actually retracing now a little bit. But that's it, right? That's how you can get tight risk to rewards, amazing risk to rewards, tight stop losses. And you can just, when you see this stuff, you just take advantage of it and you wait for your setups to happen. Now, I'm not telling you that every trade you're going to take is a 1 to 15, right? But it's about the rules. It's about forming your case, right? It's about looking at it and waiting and being patient, right? I could have traded in here when I got these arrows and the ATHs in here. Sure, I could have, but it was still in this consolidation. I need to have it leave. I need to have it. We used to call this the box trade, right? Where it blasts out of the box and then it comes back to a banker's candle, which actually in this scenario, it didn't come back to a 5-minute banker's candle. It came back to a 1-minute banker's candle. And it is what it is. Sometimes you're going to see that trade and sometimes you're not, right? But that is my thought process. And again, I'm going to repeat the disclaimer. This happens on every single asset class. If you are not yet profitable in Forex, please, for the love of everything that is good and holy, stay on Forex and learn this. Learn these patterns that happen all over the place. They happen on the larger time frames too, guys. They happen on the 1 hour. They happen on the 4 hour. They happen on the 15-minute. But you have to know what you are looking for. Don't trade in the box. Wait for the push out. The retrace is going to retrace back to somewhere, most likely, unless it's just going in a straight line. And then you miss the trade, and it is what it is, right? But this is so important. There's so many nuggets in here that I just gave you guys. I hope that it helps you in your trading journey, and look forward to seeing you on tomorrow's session. All right, guys, be blessed. May the pips be with you. Talk to you soon. Bye for now.